Yes, today we are going to see joint venture accounting, part 1. An independent accountant will be employed by the joint venture business in order to keep record of the transaction of the joint venture business. Now, let us see first what we mean when we say joint venture business. A joint venture business is a business for a short period of time. It can be 1 month, 3 months, or it can be 1 year. But in rare cases, we will see that a joint venture business to run over more than 1 year. So in order to understand the concept of joint venture business, let's take an example. Two fruits sellers can form a joint venture business in order to sell a particular amount of oranges. Once the oranges are sold, the joint venture business will close down. Or two bookshops can form a joint venture business in order to sell a particular amount of textbooks. Once all the textbooks are sold, the joint venture business, the profit will be divided between the joint partners and the partnership business, the joint venture business will close down. For example, two builders, A and B, can form a joint venture business in order to construct a school. Once the construction is over, the profit will be divided between A and B, and the joint venture business will close down. A and B will be known as co-venturers of the joint venture business. Now, materials, assets can be paid by the joint venture business. Material assets can be paid by the co-venturers. Materials or assets can be supplied by the co-venturers. Materials or assets can be sold by the joint venture business. Materials, assets can be sold by the co-venturers. Materials can be taken over by the co-venturers. Cash can be collected by the joint venture business, or cash can be collected by co-venturers. Later on, we will see the double entry for joint venture transaction. Now, what are the accounts that we'll have to open in case of joint venture business? We have to open joint venture account, co-venturers account, and joint venture bank account. So, what is a joint venture account? A joint venture account is similar to an income statement. That is, expenses are debited and income are credited. So any expenses will be recorded on the debit side of the joint venture account, and any income will be recorded on the credit side of the joint venture account. There is no distinction between revenue expenditure and capital expenditure, because the joint venture business will exist only for a short period of time. No need to differentiate between revenue expenditure or capital expenditure. For example, purchase of materials or purchase of motor van will both be classified as revenue expenditure. That is, it will be debited in the joint venture account. On the credit side of the joint venture account, we will record all income obtained by the joint venture business. And then the difference in the joint venture account will represent profit on joint venture or loss on joint venture. The profit or loss will be transferred to the co-venturers account. So co-venturers account, what we have to record in the co-venturers account: materials paid or assets paid by the co-venturer will be recorded in the co-venturers account. Material or assets supplied by the co-venturers will be recorded in the co-venturers account. And the difference in the co-venturers account will be transferred to the joint venture bank account. So the joint venture bank account will have to cancel, will have to close down at the end of the venture, since the business will not continue for the foreseeable future. So once the venture is completed, that is, once the joint venture business is completed, so the bank account will have to be closed. So it is an indication, if you are doing a question on joint venture, your joint venture bank account should be cancelled, should be closed. This is an indication that your answer is good. Now, let us see the double entry concerning joint venture transaction. Material assets paid by the joint venture business. So, material or assets paid by the joint venture business, it will be an expense for the joint venture business. Therefore, we will debit the joint venture account and then we credit the joint venture bank account. Material assets paid by the co-venturers, still it will be an expense for the joint venture business. Debit joint venture account, credit co-venturers account. Material assets supplied by the co-venturers, so still it will be an expense for the business. Debit joint venture account, credit co-venturers account. Material assets sold by the joint venture business, it will be an income for the joint venture business. Credit joint venture, debit joint venture bank account. Material assets sold by the co-venturers, credit joint venture account, debit co-venturers account. Material assets taken over by co-venturers, it will represent an income for the joint venture business. Credit joint venture, debit co-venturers account. Cash collected by co-venturers. Cash can be collected by co-venturers on site. So in this case, it will be an income for the business. Credit joint venture account, debit co-venturers account. Profit on joint venture, debit joint venture account, credit co-venturers account. Loss on joint venture, credit joint venture account, debit co-venturers account. So for this part of joint venture, part 1, where we have to open joint venture bank account, so all joint venture transactions will be recorded in the joint venture bank account. So it is important to know the double entry. When assets, materials are paid by the joint venture business, so in this case, we have to debit the joint venture account, credit the joint venture bank account. Assets, material paid by co-venturers, it will still be an expense for the joint venture business. Debit joint venture, credit co-venturers account. Any income obtained by the joint venture business will have to credit joint venture account, debit joint venture bank account. Cash collected by co-venturers, credit joint venture, debit co-venturers account. So here we are concerning the first part of joint venture account, where we have to open joint venture account, co-venturers account and joint venture bank account. So we will come, in order to be more explicit, we will come later with a question on joint venture accounting part 1, where we have to prepare joint venture account, co-venturers account, and joint venture bank account. Thank you very much for your attention. Kevin and Ravin form a joint venture business in order to undertake a building construction. A separate joint venture bank account is opened for joint venture business transaction. The following information were given. Kevin contributed 180 000 and Ravin contributed 210 000 via joint venture bank account. Material 6500 was paid by joint venture business. Material supplied by Kevin 7000. Material supplied by Ravin 10,200. Wages paid by joint venture business 6,300. Motovan 25 000 paid. Motovan 25 000 paid by Kevin. Building expenses 16,000 paid by Ravin. Ravin supplied equipment 5,200. Kevin collected cash 120 000 from owner. Ravin collected cash 65 500 from owner. Material taken over by Kevin 9,400. Building income received 450 000 for joint venture. Required joint venture account, co-venturers account, joint venture bank account. So here the question. Number 1. Kevin contributed $180,000 and Ravin contributed $10,000 via joint venture bank account. Kevin contributed, therefore we have to debit the bank account. Kevin 180 000 and then Ravin 210 000. We have to debit in the joint venture bank account, and then we have to credit in Kevin account. In Kevin account we write down bank 180 000 and in Ravin account bank 210 000. So here we are. Adjustment number 2. Material 6,500 paid by joint venture business. Therefore, it will be an expense for the joint venture. We debit in joint venture account. Materials 6,500. Then we have to credit in joint venture bank account. Materials 6,500. Then adjustment number 3. Material supplied by Kevin 7,000. It will be an expense for business. Material supply 7,000, and therefore we have to credit in supply by Kevin. Therefore we have to credit in Kevin account. We write down materials supply 7,000. Adjustment number 4. Material supplied by Ravin. Therefore, it will be an expense for the business. Material supply by Ravin. Material supply by Ravin 10,200, and therefore we have to credit in Ravin account. Material supplied 10,200. And then adjustment number 5. Wages paid by joint venture business. Wages paid by joint venture business. Debit in joint venture. Wages 6,000 and then we have to credit in joint venture bank account wages 6,000. Now moto van 25,000 paid by Kevin, therefore it will be an expense for the business moto van in joint venture account 25,000. Then we have to credit Kevin account moto van 25,000. And then we have adjustment building expenses 6,000 paid by Ravin, therefore debit in joint venture building expenses 6,000 paid by Ravin, therefore we have to credit in Ravin account building expenses 6,000. Ravin supplied equipment 5,200, therefore we have to debit in the joint venture account 5,200, and then we have to credit in Kevin account in 5,200 equipment supplied by Ravin. In Ravin account here equipment in Ravin account 5,200. And then we will have Kevin collected cash 120,000. There will be an income for the business. On the credit side, cash collected by Kevin 120,000. And then we have to debit in Kevin collected cash 120,000, therefore we have to credit in the joint venture account cash collected 120,000, and then we have to debit in Kevin account cash collected 120,000. And then we have Ravin collected cash 65,500. So we have to credit in cash collected in joint venture 65,500, and then we have to debit in Ravin account cash collected 65,500. And then we have material taken over by Kevin. Materials taken over by Kevin, so it will be an income. Materials taken by Kevin 9,400, and therefore we have to debit in Kevin account materials taken 9,400. And then we have building income received 450 for joint venture. Income received, building income 450, and then we have to debit in the joint venture bank building income 450,000. Yes, we have share profit 568,700. Then we have to record the share profit in Kevin account profit equally profit 284,350. Then we get profit on Ravin account profit 284,350. Then we have to close joint venture account has been closed. Then we have to close Kevin account So we have balance in Kevin account, balance CD in Kevin account. So we will have bank in Kevin account, bank 366 950. Then we have bank in Ravin account. In Ravin account, bank, we have 460 250. Then we have to close the bank account. The bank account will be closed by 840. We have to credit here Kevin 366 950, Ravin 460 250. Then it will close by 840 000. 840 000. The bank account will have to be closed by 840 000. So here we are.